Hi, my name is Hanna, and today we're interviewing Perryn Holtrop. Perryn Holtrop is the founder and managing partner at PayNation in the United States. Today, he shares his views on the important trends as we emerge into the post pandemic world.
This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HCJ Contacts.
Yep, and we're recording. Good morning to you, Perryn. How are you this morning?
Good, man. Good morning to you as well. Thanks for having me.
No problem at all. So to those who may be watching on YouTube or listening on the various podcast platforms, can you please introduce yourself?
Yeah, my name is Perryn Holtrop. I'm the founder and CEO of PayNation. We're a payment processing company. We specialize in manufacturer, distributors, and wholesalers, helping those kind of companies integrate payment acceptance on ERP or accounting or e-commerce platforms. We work with a myriad of different businesses, but primarily in the B2B space.
Okay, I gotcha. So, as I mentioned before, this is an area of acute interest with some of my clients, and I guess some of our listeners as well, because in this new normal, online business has to be the way to go, and obviously you need to get paid, and this is where people like you guys come in. So, I'm guessing that if you're on a platform like Walmart or Amazon FBA or whatever, you use whatever payment processing they have. But I guess is when you get to a stage where you go off on your own, this is where someone may need to talk to a company like yours.
Yeah, so when you're dealing with like an Amazon, they have their own Amazon payments that they implemented a few years ago. But that's not how everyone sells. I mean, it is, ideal. A lot of companies go that route because it's all built in. But if you're developing your own website or your own shopping cart or your own app, and you're not really necessarily interested in using kind of the out-of-box solutions like perhaps Shopify or one of those, you're going to need a company that will allow or give you access to a payment gateway and ultimately the ability to process payments. Sometimes the out-of-box solutions like the Stripes of the world tend to be a little bit on the higher level in terms of cost. They work really well for someone that's really trying to get up and running quick. But if it's a business where primarily a majority of your payments are coming from outside of the Amazon ecosphere, you probably would want to work with a company like me to be able to be more, a little bit more integrated, a little bit more custom, and then obviously the fees will be substantially less because it's not just a one size fits all.
I gotcha. So what would be the threshold for a company that wants to work with someone like yourself?
It's always a tough question that people ask because it's like when people ask me that, I'm kind of alienating myself. But what I would say is if you're a brand new company that's only doing a couple $1,000s a month in credit card volume, it would probably make sense to go to like a Stripe or a Square just because it's really easy to get up and running. But if you're doing more than, $10,000 a month in credit card volume, it's probably a good idea to kind of start looking. People go to the PayPals and the Stripes of the world because it's super easy to get set up. And a lot of times people are doing that just as kind of like some ancillary income. But if it's your primary income and that's your primary business is e-commerce and you're doing a substantial amount of business, it would probably behoove that person to talk to a person like myself.
I gotcha. Now, in a way, it feels a bit counterintuitive because I imagine, your Stripes, your PayPal, they deal with such scale that in theory, I would imagine that their transaction prices or the actual transaction cost should be lower because of scale. Yet, counterintuitively, their fees are higher. Any idea why it works in such like an opposite direction?
Yeah, so that's a really good question. Is Square and the Stripes of the world are their business model is wrapped around small accounts.
Yeah.
So they're what we call a payment facilitator or an aggregator of sorts, where they've kind of housed the technology and the underwriting, and they're not necessarily a credit card processor. And
Mm,
so what they're counting on the small accounts. They look at having, millions of companies that are doing a couple $1,000s a month, which is probably a lot more than hundreds of companies that are doing 100,000 a month.
mm,
And so their model is wrapped around the people, the quick, easy, couple line items of information that they're looking for, and you're up and running, processing payments in a matter of a couple of hours. So that's kind of their model. I know like some of the Shopify and some of these other companies have created Shopify Plus, which is designed more for those companies that are doing $1 million or more in credit card volume a year. And there's more and more branches of their business that's focused to the bigger companies. But
mhm.
ideally, they're not really designed for large volume merchants. They're designed for their business models wrapped around small accounts, and that's why it's set up that way.
Understood. I hear you. So with my line of work, so with international tax for entrepreneurs, I spend a fair bit of my time dealing with banks because a client would always have some issue with a bank with their compliance requirements. They need this piece of paperwork. They don't understand this transaction. And my clients tend to call me and, well, could you talk to that banker? You guys speak the same language, and we try to work things out. So I just step back, and I think over time, banks are becoming increasingly difficult to deal with. How is it for you as an intermediary who deals with banks, full time? How is it for you dealing
You
with
know,
them?
it's been kind of a mixed bag. So,
Mm,
uh, bringing a little context to that question, and a really good question, a well thought out question. So, thank you. The way credit card processing works is generally underwritten by a bank. And what that
mm,
mean by underwritten is kind of think of it like if I process a payment for your company, let's say a $10,000 payment, uh,
mm,
that money is in your account tomorrow, right?
yeah.
But it takes up to 30 days for the processor, the actual company that's processing that payment, up to 30 days to reconcile that payment from the actual card brand. So once you get an authorization code, that's basically, hey, we're going to get our money, but that money is in your account tomorrow. And
Mm,
so that process or that underwriting is why there's an underwriter involved, because that bank
mm,
is ultimately deciding on whether or not this company is worthy enough to process this amount of volume per month or per week or per day. Okay.
mm,
And so the banks, the bigger banks that do a lot of the underwriting for these have been a little bit more stringent during COVID. So like a lot of the businesses that what we consider low risk, like restaurants, schools, massage, spas and such, very low risk stuff has become high risk in a sense, because a lot of those companies or businesses have been closed or gone out of business because of COVID. So
mm,
the banking underwriting process has been kind of flipped on the side of its head, just because a lot of companies have been, or a lot of banks and underwritings that companies have been really um, nervous, I guess.
mm,
Now it's starting to open up a little bit more. Restaurants are opening up, bars are slowly opening up in certain states, not here in California where I live. Schools are opening up, so things are starting to open up again. But there was a period of time, 3, 4, 5 months or so, where it was very difficult. Where the stuff the easy stuff, the low risk stuff that gets instant approved, took a couple weeks sometimes to get approved. But it's everybody in the banking world. This is something that we haven't seen in a long time, in 100+ years. Pandemic like this,
mm.
economies our economy took a hit, and everyone got nervous. But I think more and more people are starting to understand where we're at now, and it's starting to get kind of back to normal, not quite, but it's a little bit easier to get some stuff approved now.
Okay, understood. So that actually leads me to another thought in that before like a business can come to work with someone like yourself, they must have established a good credit rating for themselves. Because is that part of the package as well?
Yes, kind of. Most of the time, you know, generally when you're running, so here's without getting into the weeds, when you open up a merchant account, they are doing generally a soft pull on your credit, just to verify that you are who you are, right? Just because of the KTC, KYC, know your client rules, and the Patriot Act here in the U.S., just to make sure that, you know, Perryn Holtrop is Perryn Holtrop, right? Or Derren Joseph is Derren Joseph, right? So there is that. But generally, they're looking at, is the business legit? Is it a really, you know, if it's a corporation, is it filed at the Secretary of State? Is it suspended or not? Does the tax ID match? Does the bank account match the name of the business? So there's a lot of internal software that's used to verify a lot of these things. If you are a business who had credit before, and then for whatever reason your account got you know, maybe canceled, or, you know, you were selling a product that wasn't in the scope of what you originally was set up for, you know, processors will shut your account down, and then they put you on what's called a match list, which is essentially kind of like a check systems for bank, but for merchant credit card, where it'll be hard for you to get credit card processing again. So, you know, they definitely have their rules. You know, I've seen businesses that have a really good business, really strong business, but maybe the signer credit isn't the greatest. You can still get approved. It's just the business has to justify the amount of volume that you're talking about doing, has to justify your business. In other words, if you're a company that does $100,000 a year for whatever it is, but you're trying to say, hey, I process $1 million a month, they're going to be like, that doesn't make sense. They're going to want to see financials and stuff like that.
Okay. And from what you're saying, it's not just the company that they have a look at, but the people behind the company as well.
Correct. So what happens a lot of times is we'll have, let's say we'll have a large account, large company that perhaps there's multiple owners. So generally they're looking, if there's an owner that owns 25% or more of that business, they're going to want to look at everybody involved. Sometimes we're dealing with, you know, private companies, or excuse me, publicly held companies, or even nonprofit, where there may not necessarily be one owner or one particular person. You know, they're going to want to see some financials and see some different information of the signer. So the larger the account, the more information that they're going to want. So, you know, if you were a large, you know, company doing a lot of processing, even in a scenario like that, if you were to go to like a Stripe or PayPal, even them, they're going to want to get as much detailed information, because the more credit card that you're processing, or more money that company is floating for you, the more financials and more information they're going to want to make sure that you're financially solvent, I guess, if you will, to where, because here's what happens: if they process $1 million or $2 million and that money's in your account tomorrow, and then you go out of business, that processor is stuck holding that bag of those fees and that $1 million. That's why it's very, very important that companies really know. So, you know, people always have this really kind of this wrong interpretation that, you know, credit card companies are just people that, you know, put in a terminal, we put your money in there. No, there's a lot of behind the scenes stuff that's done to make sure that all of that stuff is correct. So they're gonna want to know everything about you as much as they can. The more you do, the more they're gonna want to know.
And is it also, well, not unusual for like the directors or major shareholders to have to offer some sort of personal guarantee as well?
Generally, a personal guarantee is generally always on the smaller accounts, believe it or
Okay.
not.
Mm-hmm.
Very rarely is a personal guarantee really required because they're doing so much due diligence and there's a lot of analytics behind it. You know, they even have a program that will verify your bank account and making sure that the routing number and the account number matches the business. They have software for all of this stuff.
Mm-hmm.
So generally, if the larger the account, if it's a large company that has good financials and stuff, very rarely is a personal guarantee required. There are some cases where there's an account, maybe it's a multi-location, 100, 200,000 location, maybe company where there's a lot of hardware involved and there's maybe some concessions in that regard on getting some of this hardware to that customer. There'll be maybe some long-term contracts or some type of liquidated damages in the clause to make sure that, hey, look, we're fronting all of this equipment, so you have to stay with us for a certain period of time. But even in those scenarios, a PG or personal guarantee is very rare. But they do ask for them. Our agreements do ask for them. It's just really case by case.
Right, because I've had some clients who are non-American, so they are based wherever, Singapore, whatever, and they are selling into the US, and it has come up. And the banks or whoever the payment gateway is, they actually want to deal with someone who is a US person. So
Yeah.
they want, okay, so who on your board is a US citizen or at least a permanent resident green card holder?
Yeah.
So,
Yeah. So, we generally work with US and Canada.
mhm.
So, if we have clients that are outside of the US and Canada that want to process with us, what we look for is at least, and I think you and I talked about this on another call, but they're looking for at least a company that has a bank where the payments are settled in the US. So in other words, you can be an Australian e-commerce company that sells Australian art
Mhm.
to myriad of different countries, but the money needs to settle in the U.S. in a U.S. bank. If you're have a U.S. Australian or Japanese or Singaporean whatever bank and a company in that country, then you would have to get a processor in that particular country. And that's kind of one of the things where like Stripe and PayPal kind of earn their keep because they're really good in those international forums. And really easy to set up. So, those are why those kinds of companies work. But again, if you're doing a large amount of volume and doing business in whatever country you're in, you would want to work with the premier major processor in that country to take your payments because it's going to cost you a lot less in the long run.
Right. And what about so-called challenger banks? So banks without a physical location, like fintechs, do you deal with those?
No. So the banks, when we're dealing with the bank, we're only dealing on the underwriting scenario. So the
Yeah.
banks the bank underwriting banks are already set in stone. Every company has maybe one or two, like here in the States, Wells Fargo is a very prominent underwriting bank for processors on the underwriting side, not on the, on the treasury side or whatever, just on
Yeah.
the underwriting side.
Yeah.
US Bank is a big one. There's a handful of them, but those are already kind of set in stone. There are some other bank charters, if you will, maybe like internet banks and those kinds of banks that have looked to try to be an underwriting in the payment processing space. But, some of the bigger banks have such a stronghold on a lot of that. A lot of times what you'll see is those banks that want credit card processing will come in as a joint partnership to have a processing company like myself and partner with them and put their name on the statements and kind of that bank doing processing by proxy us. But you very rarely will see some of those I forgot the name that you called it, but those types of banks actually being an underwriter for processing it. I haven't seen it yet. Not saying it can't be done. I just haven't seen it.
Okay. So in terms of big trends that you observe, what are the big trends to look out for?
Uh, Trends in what respect?
In payment processing. I imagine it, the fintech is like a buzzword right now. I mean,
Yeah.
the original fintech being PayPal, but there's so many other players who, take up various niches along that value chain. I'm sure there's a lot going on, right?
Yeah, absolutely. Well, last year alone, we had $100 billion worth of acquisitions and mergers between some of the larger credit card processors. Like here in the States, Vantif and WorldPay were two separate processors. They merged and then were bought out by FIS, which is the company that owns Fidelity. Fiserv, FISERV, Fiserv company merged with First Data, which is the largest credit card processor. Now Fiserv is the largest fintech company in the world. You had Global Payments that bought out TSYS and Heartland, which are really large processors. So there was a lot of mergers going on. But the bigger trends that you'll kind of see, there's a few. One is integrated payments. You're going to see a lot of software companies or particular software for a particular vertical where you're going to see that company offering an integrated solution. So you're not going to, kind of double entering of the payments. If you have an invoice, let's say QuickBooks or certain type of ERP system or whatever, everything is kind of inclusive. So you're going to see a lot of that. That's very common. That's something that our company is working on, is several integrations to have those integrations in-house. So when we come across these certain types of deals, we have those integrations to work directly with their software. So that's something that you'll see a lot of. A matter of fact, a lot of the mergers that happened last year was based on those various companies having a larger amount of those integrations, and what we call ISVs, or independent software vendors, where you might have a particular new SaaS company or a long-standing SaaS company, and you want to be able to offer your customers a payment solution built into the software. So that's a big trend that you'll see a lot of, more and more and more. That's kind of where the business is going. Contactless, you'll see a lot of that. Just people are not, wanting to touch cards if they don't have to, or wanting to touch check or cash for that matter. We're going more to you'll even see here in the States, you go into a restaurant or somewhere, they prefer a credit card over cash. They still want to touch money. We got the coin shortage. So you'll see a lot of contactless. And then, something that has been growing steadily over the last, over a decade or more is e-commerce. You got a lot of companies that weren't in the e-commerce space really that heavily before, but realize that it's a necessary evil, if you will, if you want to even call it an evil, where they need to be able to accept payment online. And it's not really just a B2C platform where, hey, I can buy, a new case for my iPhone. You have a setup where companies are setting in a username and login in a wholesale environment and be able to buy equipment from wholesalers through an e-commerce channel. So they're not doing their traditional will call or 30-day terms. Everything is done through an e-commerce platform. So you'll see a lot more of that. I've been dealing with a lot more of that probably in the last 12 months or so. So those are some of the really more apparent trends that in the payment space that you see a lot more of.
Yeah, I was speaking to someone a couple of weeks ago who was talking about e-commerce opportunity to look for really is B2B rather than B2C. So it kind of echoes what you were seeing as well. But one thing I expected to hear from you and I didn't was blockchain. I would assume that, your line of work is ripe for blockchain applications, is it?
Yeah, it's a conversation and a question that I get probably at least a couple times a week. You would think that we were right for it. I just think that, Bitcoin and, Ether and all those other ones that are the more popular ones, I think it's just too volatile still. I know that Square, which owns the Cash App, which a lot of people use. They have the ability to send Bitcoin through there, and there's a couple of other companies that have filed for patents to be able to process crypto. But it's not something that I think is widely adopted yet. And I think that there's probably some level of some lobbying or something on the back end that a lot of these banks don't want to lose out on the money they're making off the processing, because obviously with the crypto, it's a totally different platform. But we do see blockchain, not necessarily just in crypto, but just in in supply chain and stuff like that. But I don't foresee blockchain going that much longer with being able to process it like a credit card. I do think that the processing companies will adopt some type of technology on a more general scale very soon. I would say within the next, in the next 5 years, perhaps, maybe sooner. But it's really not going to change much in terms of the technology on how to process a payment. Obviously, rather entering a credit card as opposed to whatever information is going to be required for blockchain. But I do think it's going to be a lot sooner than we think. But it's not something that people are really clamoring for. I think that with the advent of EMV and chip cards, and then in the card present environment, just the PCI rules and a lot of stuff that you're seeing in terms of privacy and just making sure the data is safe. We're still working with credit card stuff, so to add another layer of a payment on there would probably be too much of a disruption. But I think you'll see it adopted more and more as time progresses, for sure.
Okay, so it's on the way, but not quite yet. Okay.
Yeah, like I said, there's a few companies out there that have filed some patents and have tried to introduce it. It's just not widely accepted. Like, give you an example, like contactless. Contactless has been out for a couple of years and hasn't really taken hold until the COVID stuff happened. More and more people are using Apple Pay and Samsung Pay and all this stuff. That stuff's been around for years. Just no one just really cared to use it. Now it's becoming more adopted because of the situation. So I think crypto is probably going to be a similar situation, that is going to require some kind of event where people are more comfortable using crypto as opposed to credit card, perhaps. But I don't think the technology is quite there yet. It's there, but it's not really. I don't think it's a priority to most of the banks, and that's my opinion.
Right. Okay. I hear you. So thanks for sharing your time. Thanks for sharing your insight. Now, if there's anyone out there that's running their own business, maybe an e-commerce business, and it's at the 6-7 figures, and they want to reach out to you, what's the best way for them to find you?
We're on on all social media platforms. We're at PayNation US, websites PayNation.us. So we're on LinkedIn, YouTube, Twitter, Instagram. Everything's PayNation US. Website again, PayNation.us. Send us an email. We have on our website, we have all of our email and phone contact information. But if somebody's interested or just has questions, it's a matter of getting in touch with one of us, and we'll be happy to get on the call and kind of walk through. Majority of our accounts and clients that we deal with, especially if it's a kind of unusual type of, maybe it's a new business or new platform or whatever. We have so many different solutions and tools to work. It's just really kind of a matter of figuring out what's the best solution. So one of us would be happy to get on a call with someone and kind of walk through some scenarios to find out what the best solution is. But we'd be happy to help.
Perryn Holtrop, PayNation US, thank you very much for your time.
Thank you. Thanks for having me. And great questions. I look forward to doing some business with you as well.
Absolutely.
All righty, man.
Please subscribe, like, share, and comment below. Our books and upcoming events are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.